Hey, Aaron Adams with Infinity Investing. Thanks for joining me. I want to take a few minutes and discuss with you an answer to a question that I constantly get. What are the hottest real estate markets in 2022? Where are you investing right now? What are you looking at? Now, I spend a significant amount of time researching markets. One of my favorite websites for that, Harvard has a joint center for housing studies that you can just type that into Google and go there. You don't have to register, you don't have to pay for it. It's a think tank for housing, some fantastic kind of trends and articles. That's usually my starting point. I make sure that I read virtually everything that comes up in terms of research there. But then over the years, I've developed a 5-point criteria that I like to utilize for evaluating markets. So let me kind of go through those quickly with you and then tell you what areas of the country I think best fit that criteria. So I have a slide here. These are what I would say are the qualities of a great market for investing. This is just my own personal criteria. I'm constantly kind of challenging this and reevaluating it, but it's served me well for over 22 years. The first thing I look for is affordable housing. I look at median income to median home price. I compare the two to each other and come up with an affordability number. Just cheap houses isn't good. Just high wages isn't good. You want the combination, the relationship of affordability that's created when you have relatively lower cost homes and relatively higher wages in the area. Right now, as I look around the country, affordability is not good on the West Coast, on the East Coast, in much of the Sun Belt. I do think that, in states like North Carolina, South Carolina, as you go down into the South, Mississippi, Alabama, some of the Midwestern states like Kansas City, you see still a decent affordability. And that's important when you're talking about rental property because you want your tenants to be able to afford to buy from you down the road. And if the market is so crazy in a market like San Francisco, where nobody can afford to live there, you have teachers who are commuting in from an hour away. And so I try to avoid those areas from a rental standpoint. Now, the second area that I look at and that I evaluate is jobs or unemployment. But I don't just look at unemployment. I compare a market to the surrounding states that touch that market. So I don't care what unemployment is in LA as compared to Miami. I want to look at like Indianapolis compared to the states that touch Indiana. So, Michigan, Ohio, Illinois, how is it looking in the region? Is this market or is this city outperforming the region? Now, population growth goes hand in hand because unlike in markets like in England or the UK, where people don't tend to migrate as much as they do here, population decline, population growth is usually driven by jobs. And so I'm really hyper-focused on millennials, on Gen Xers, on Gen Z. Where are they relocating to and for what kind of jobs? Tech is one of my favorites, for example, to track. And so where are the 20-somethings picking up after, let's say, college and moving to and settling? That's an important metric. I don't care as much where the boomers are moving, where they've gone. I care much more about the basically under 40-year-old crowd, the 25 to 40, that 15-year timeline. Where are they moving and for what types of jobs are they moving? When you buy a property, you're not just buying a property, you really are buying a business. And when you buy a property to rent it out, how you do business in that state and how business friendly that state is and how fiscally sound that state is and that city itself become huge factors in deciding whether I want to buy the property. And if you think about it from a business standpoint, you're dealing with everything from as little as renewal fees for LLCs, permitting fees, connection fees for utilities. How landlord-tenant friendly is it? If there's rental caps in place, places like New York City are not going to be landlord friendly. States like California are not particularly business friendly. And so I think twice before owning a rental in one of those types of markets. It's tough. It doesn't mean that if you can get a property for 20 cents on the dollar that you shouldn't consider keeping that as a rental. But if given the choice of anywhere in the U.S., I would suggest that you focus on states that are fiscally sound, that are business friendly, and in cities that haven't given too much of their money away to pensions. One of the biggest financial millstones for markets across the U.S. Take Chicago, for example. Chicago has overpromised way too much in pension money. It doesn't have enough saved up. Their options, like some cities have done, may be to default on their pension obligations. And so, or the city council starts looking around and saying, who can we charge more for property tax? Who can we charge more for permitting? The business owners. And as a landlord, you fall under that umbrella. And so as I kind of combine research on these markets, the Midwest is fantastic right now. The South, I never would have considered states like Alabama before, but those are becoming viable, and Mississippi, and there's high affordability in those markets. In 2022, we are severely underbuilt. We're short 3 to 4 million housing units, and that's the complete opposite of where we were in 2018, when we were overbuilt because of subprime mortgages, because of builders getting easy loans from banks. And so as an investor, I'm thinking about those markets that are kind of one-off. I mean, look, when I left Southern California in 2004 to start Alpine Property Management in Indianapolis, people were like, why are you going to Indianapolis? What are you thinking? What are you doing? And it was a function of me doing my research and trying to decide how to navigate affordability, unemployment, population growth, and then that business environment for both the state and the city. And as I did that, in 2004, 5, 6, and 7, markets like Dallas were interesting to me, Kansas City, Charlotte, Orlando, Las Vegas. Some of those markets are no longer viable. I mean, they just redid taxes in Texas, and it's just killing it for landlords. It's not good. And Vegas is so crazy and has gone up so much since 2005 over the last 17 years. It's not particularly viable. And so, as an investor, I like to think of the U.S. economy as a collection of very different markets, and the benefits change as the economy does, as inventory of homes changes, as affordability, and as cities and states become more or less business friendly. And then as we Americans move around, because you need someone to live in that house and pay your rent. And so at Infinity Investing, we host a 3-day summit at my offices where we bring you up to speed on what we're seeing as opportunities and what the most current trends are. Would love for you to join us at that event. Once a month, we do a free all-day online Infinity Investing workshop. Hop over to infinityinvesting.com, get signed up as a basic member. Join me at that next workshop, and hopefully that will translate into you joining me in person at one of our live events. I appreciate you taking a few minutes to join me today, and hopefully that's been helpful in terms of you identifying what the hot opportunities are.